This is the briefing for Friday, March 4th. Really, not a whole lot is going on in the stock indices. We see a lot of fluctuation in the indices up one day, down the next, back up the next day. But basically, we haven't gone anywhere. You can see here, this is the spiders on a 120-minute chart. And what we're really looking at is multiple time frame rotations in a much greater degree time frame rotation. Now, you can see this rotation here, then this rotation here, then this rotation here that we're currently in, making up a greater degree time frame rotation with a breakout here and then a retest and then trading back through this 425 area. So really, when we look at this, we've got 1, 2, 3, 4, 5, 6, 7 days, if you include this day here, that we have really gone nowhere except for rotation between about 425 and about, I'm going to guess about 442, the 440 area, I should say, in the spiders. And it's been 7 days of just rotation. And you can even see in shorter time frames, even rotations at these extremes. So really, there's just nothing that we can do except wait for a greater degree time and price move, which would basically come at the break of these intermediate term time frame support and resistance areas, and that being in the spiders about the 440 area, 442 in the spiders as resistance, and 425 as support. Now, if you remember from previous briefings, this is the January 21, I think it's January 24th low. January 24th low. And we had, this was an exhaustive move that basically sellers came in, they drove it lower. There was a gap in the morning. They drove it lower, and then buyers came in. Sellers exhausted themselves. Buyers came in and drove price back up. And that brought us through to this, trading all the way basically from about 420 all the way up to about 460, about 40 points in the spiders. And then, of course, we stalled. And then, of course, the sell-off going into the February 24th low. This is the February 24th low. Now, there was a gap down, but the difference between these two, this was an exhaustive move. This did not appear to be exhaustive. And I covered that in one of the intraday briefings because it didn't gap and go. It gapped, and then buyers came in immediately. So typically, for an exhaustive move to happen like that is that you have sellers that just basically puke their shares up, and they gap it down and they continue to puke out, and then all of a sudden they're done and there's no more selling. Sellers have exhausted themselves and buyers come in, and you get this buying tail that you can see here. That didn't happen here, and as you know, I've been suspect of this part of the rally. Now basically we're back in this rotational area. A little bit of rotation for today, right at the lower extreme at this 425 area. But I still feel the higher probability is this February 24th low is potentially going to be taken out, I should say tested and then taken out. Once an area like this is tested, typically you're going to see a slightly lower low. Now, what would change that would be trading above 440 and seeing the market internals confirm that move. In other words, the market from an internal perspective strengthening. And you can see even in yesterday's trading, you can see this high here, and then basically we had lower breadth, and it continued to deteriorate through the day yesterday, and then of course was even lower in today's trading. I think it was about 1,800 shares negative at the low today, recovering to about 1,176 shares, as you can see. So basically this move, even this rally here, was not very strong. Going into the high, there was a divergence yesterday, and of course and what we saw in today's trading was lower prices, and then of course testing and closing right near this 425 low. There was some buying that came in at the end of the day today, but I really am suspect of that buying. Now, new highs minus new lows, 614 shares more trading lower or new lows as opposed to new highs. If you look at this, this has basically been negative for quite some time, for the 7 days that this has been trading like that. So the internals are not strengthening. We do get buyers that step in periodically and try and drive price higher. And you can see that right through here. This is the spiders on a 30-minute chart. And you can see the buying that came in at the end of the day. This is the Qs. A little bit of buying that came in at the end of the day there also, but really nothing to write home about. So I still suspect that we'll see the potential for the February 24th low at least tested. The key is going to be breaking 425 in the spiders. Now, this is the 335 area in the Q, so you can see the rotation here in today's trading. That gives us an area of good trade location, suggesting that if it trades below that, then potentially we're going to test this February 24th low here as well. About 340 area in the Qs is upside resistance, and you can see this area of rotation today that we got really gives us good areas of trade location. I want to be long above 340 with caution because the market internals are just not confirming the buying part of this, and it's going to be important to see the internals begin to confirm any move higher. So trading above 340 would open up the potential to trade up to about the 345 area, which is this high right through here. And the same thing in the Qs, looking at this 440, 425 area up to about the 440 area. Looking at the Qs from a little bit longer perspective, this is a 120-minute chart. You can see the rotation that's been occurring and then a shorter term rotation here. Today's trading giving us really just a rotation right around the 335 area. Now, what's typical here is the psychology behind these rotations is this is basically trade being facilitated. In other words, traders feel that value is within this area of 370 down to about the 335 area. So trade is being facilitated in here. What this gives us also is that when you come down and you test an extreme, an upper extreme or a lower extreme, you get a pause, and that's typical, to have that pause because traders know that this is an unfair price level. In other words, every time it was tested, we bounced off it, especially through here, and then tested the upper extremes. So they paused to see if there really is enough volume, enough impetus or impulsiveness to trade below this and test this February 24th low. So we got this pause basically in today's trading, which is typical. So you want to be short below today's low, and then of course long above today's high. That would suggest another rotation back up to test about this 355 area in the Qs. Looking at the Russell, greater degree time frame rotation. This is really a nice chart pattern right through here in this rotation. Now, I do have a shorter term rotation right through here, pausing in another rotation right at this 198 to 200 level. Certainly you want to look to be short the Russell below today's low. Support's going to come in right around 190. That's pretty close to the February 24th low, and certainly long above today's high, about the 200 area. That would open up trading up to about the 209 area, which is going to be resistance in the Russell. Now, one of the interesting things that occurred in today's trading is that you can see that breadth both in the NYSE and in the NASDAQ was pretty negative. And then what happened with that is that brought us to a point of being extremely oversold in the NASDAQ and basically slightly oversold in the NYSE. That would give us an indication that although we would see there is a potential for lower prices on Monday, that we would be reaching a point of being extremely oversold, and that would suggest some type of pause or rotation back up. Now, keep this in mind that we are extremely oversold in the NASDAQ and slightly oversold in the NYSE. So going back, and I'll use the S&Ps and the NASDAQ as an example. So you can see that market breadth was at a negative almost 2,000 shares here. So trading below, if we were to get a gap down on Monday or a move down on Monday that traded through this area right through here, which this is going to come in, this is shorter term time frame, so the numbers are a little bit different. This is about 430. So 430 down to about 425 is really support from a short term to a longer term chart. But if we get a trade below this level and market breadth is not at least as weak as it was at its extreme in today's trading, that's a suggestion that the market is strengthening and you're going to see rotation back up through this range. So even if this level's taken out, we could see a break down to 425, which is longer term support. And then with a divergence in market breadth, that would suggest rotation back through this range. So just be cautious of that in Monday's trading. Same thing with the NASDAQ, looking to be short below today's low, but watch what happens. You can see NASDAQ breadth was negative 2,158 shares. So that's going to be important to see any lower low, to not see a divergence in market breadth on Monday's trading, if that were to occur. If we do get a rotation up, it's going to work off the oversold condition that we have right now. How that develops will be extremely important, and that would give us an indication as to whether we're just going to be continuing in this rotational pattern or whether we're going to be breaking to the upside or downside in a greater degree time frame. Understanding the development of price in multiple time frames is really critical here. Have a great weekend, and it should be a very interesting opening on Monday.